Amit, I wanted your view on the metal pack and how you all are playing that. The results, well, they were more or less in line with what the street was working with. Top line up by close to around 6%. The EBITDA number was up by close to around 55%. And margins, well, they expanded on a year-on-year basis on a very low base. They've got some benefit of lower power and fuel costs because despite the top line growing by 6%, the power and fuel cost was down by close to around 5%. The PAT number as well did come in lower by 5%, but that's because in the base year, there was an exceptional gain. So that explains why we are seeing growth on the EBITDA front, but we're not seeing growth on the profitability front. Moving to their segmental performance, well, the aluminium business did very, very well. Just a few quarters ago, they were doing around 2,000 crores per quarter on the aluminium front. Well, that's gone up to more than 4,000 crores on a per quarter basis. So aluminium is the one that's driving the way. The problem is that aluminium prices have corrected post the first quarter. And that's why this profitability may not hold or will not hold actually. The oil and gas business, it continues to struggle, so you're still waiting by for profitability to catch up out there. Besides the numbers, the commentary is important. And, on the debt front, well, it's gone up marginally. The debt number on a year-on-year, on a sequential basis actually, has perked up a little bit, but that's par for the course. The management says that the demerger is on track. All the approvals are in. The key creditors like SBI and LIC, they have given their no objection certificate. So that's positive because the street is looking by for some value unlocking. And also they're saying they raise 8,500 crores by the QIP route. That's going to help them deleverage their books. They've also released the pledge on Hindustan Zinc's book out there. And they've said that the interest savings will be around 1,100 crores from this particular QIP. So put everything together, one of the best plays on the metal space. The numbers are good. The problem is the global environment has turned a little bit jittery, and that's why the stock is not reacting in that manner. Gurmeet, what's your take on this one?
So, I agree, Nigel, it's one of the cheapest metal stock available, but it is cheap for a reason. We know that with the kind of pedigrees that. I think the two big triggers, as you pointed out, one is the demerger plan, and second is debt reduction. I think what one thing which stood out is if you see the finance cost, it's almost down 10% YoY. The net debt has also come down. So I think that's something market would be looking at, more closely to make it, let's say, value closer to some of the leading names there. But anything right now with global linkages, with China involved, global factors involved, it's better to not get into it. Although metal stocks are, as I mentioned, is reasonable, especially Vedanta. But I think rather focus on the domestic plays right now, which are, let's say, FMCG, healthcare also not the generic ones, but the branded ones, rural economy facing stocks. And maybe rate sensitive. I believe, in banks, probably there is a better opportunity. Interest rate cuts will happen over the next 2-3 months. And the one big issue, which is NIM coming down, will get addressed.
Okay. That's a word coming in on some of the companies that have reported numbers. By the way, speaking of earnings misses